There is a moment in every student and recent graduate's financial journey when everything changes. One day you are checking your credit score app and feeling like you are barely making progress. You have been doing the right things, paying on time, keeping your balance low, not applying for anything new, and the number just sits there, moving slowly, almost like it is mocking you. Then one morning you open the app and it says 700, or 703, or 712, and suddenly, without you doing anything differently that week, the financial system starts treating you like a completely different person. It is not magic, it is a number. And there are three specific things that change so dramatically the moment a student or recent graduate crosses that 700 line that your entire financial life as a young person shifts into a different gear. My name is TJ, and I spend an embarrassing amount of time studying why the credit score system treats people so differently depending on which side of a single line they are standing on. If you are a student or recent graduate who is tired of watching your score climb slowly and wondering if any of it actually matters, make sure to subscribe and hit that like button, because by the end of this video you will understand exactly what is waiting for you on the other side of 700 and exactly how to get there. Now, before we get into the three things that change, let me ask you something serious. When you think about a credit score of 700, what really comes to mind? Maybe you picture it as just a bigger number. Maybe you think it means you are finally doing okay financially. Maybe you assume it is something that only matters when you are older and buying a house or a car. But here is what might actually surprise you. The jump from 620 to 700 is not just a bigger number. It is a category change. It is the difference between being treated as a financial risk and being treated as a financial opportunity. And for students and recent graduates who are just starting their adult financial lives, that category change opens doors that were physically closed before, regardless of how responsible you actually were. Here is the way I think about it. Below 700, the system is watching you. Every lender, every landlord, every bank looks at your file and sees someone they are not sure about yet. They are willing to work with you, but on their terms. Higher deposits, higher interest rates, lower limits, more conditions, more hoops to jump through. Above 700, the system starts working for you. The same institutions that were cautious before now compete for your business. Better rates, lower deposits, higher limits, pre-approval offers. The number did not just get bigger, your entire relationship with the financial system changed. I call it the 700 shift. And for recent graduates specifically, it is one of the most powerful financial events that almost nobody ever explains to you before it happens. Let us get into the three things that actually change. The first thing that changes: apartment applications. If you are a student or recent graduate looking for your first apartment, your credit score is one of the first things a landlord or letting agent checks. And the difference between a 620 score and a 700 score in an apartment application is not subtle. It is the difference between getting the flat and not getting it. Most corporate landlords and property management companies use automated screening systems that have hard cutoff points. Many of them sit right around 620 to 650. Below that line, automatic rejection or a requirement for a cosigner. Above that line, you pass the screen and a human actually looks at your application. But here is what changes specifically at 700. Below 700, even if you pass the basic screen, most landlords will ask for an additional security deposit on top of the standard one. Sometimes one extra month, sometimes two. On a flat renting for $900 a month, that could mean finding an extra $900 to $1,800 up front before you even get the keys. For a student or recent graduate who is already stretching to cover first month and standard deposit, that extra requirement is often the thing that stops you from getting the flat entirely. Above 700, that extra deposit requirement disappears for most landlords. You pay the standard deposit, you sign the lease. You move in, no cosigner needed, no extra month up front, no negotiating. Marcus is 23 years old. He graduated 8 months ago and has been living with his parents while he saves to move out. He applied for 3 apartments with a 648 score. All 3 asked for an additional month deposit he could not afford. He focused on his credit for 6 months, paid down his card balance, fixed a reporting error on his file, and got added as an authorized user on his dad's card. His score moved to 706. He applied for a 4th apartment, standard deposit only. He moved in 3 weeks later. The apartment did not change. The landlord did not change. The only thing that changed was which side of 700 he was standing on. The second thing that changes, interest rates on loans and financing. As a student or recent graduate, you are going to need to borrow money at some point, a personal loan for an emergency, financing for a used car to get to a job, refinancing your student loans to get a lower rate, and the interest rate you get on any of those products is directly tied to your credit score. Here is what the numbers actually look like for a recent graduate at this life stage. Let's say you need a $5,000 personal loan. Maybe your car broke down. Maybe you need to cover a gap between jobs. Maybe you have an unexpected medical bill. At a 620 score, the interest rate on a personal loan from most lenders sits between 20 and 28%. At a 700 score, that same loan from the same lender drops to somewhere between 10 and 14%. On a $5,000 loan paid back over 2 years, the difference between 24% and 12% interest is over $700 in real money. $700. Not in some abstract future, in the next 24 months. Just because of which side of 700 your score sits on when you walk through the door. Now apply the same logic to student loan refinancing. If you graduated with federal student loans at a fixed rate of 6 or 7%, refinancing with a private lender, once your score crosses 700, can reduce that rate to 4 or 5% depending on your income and lender. On a $15,000 student loan balance, that difference saves you hundreds of dollars over the life of the repayment. And unlike most financial improvements that take years to feel, this one shows up in your monthly payment immediately. Priya is 24 years old. She graduated with $14,000 in student loans at 6.8%. She spent 18 months building her credit score from 651 to 714. She refinanced her loans at 4.9%. Her monthly payment dropped by $31. That is $31 every single month for the rest of her repayment period, redirected from interest payments back into her own pocket. She did not get a raise. She did not find a side hustle, she just crossed 700. The third thing that changes, the credit card offers you actually receive. Below 700, the credit card offers available to a student or recent graduate are limited. Secured cards that require a deposit. Student cards with low limits and no real rewards. Basic starter products designed for people the system is not yet sure about. These cards serve a purpose. They help you build history, but they are not the products that start genuinely working for you financially. Above 700, the product landscape changes completely. Unsecured cards with real credit limits between $1,500 and $3,000. Cards with actual cashback rewards on everyday spending. Groceries, petrol, subscriptions. Cards with 0% introductory periods that let you make a necessary large purchase and pay it off over 12 months without paying interest. Cards with sign-up bonuses that pay you back just for using the card for normal spending you were already going to do. For a recent graduate who is spending money on groceries, transport, and subscriptions every month anyway, the difference between a basic starter card earning nothing and a rewards card earning 2% cash back is real money back in your pocket every single month. Not life-changing money, but real, consistent, compounding value from spending you were already going to do regardless. And here is the part most people do not think about. The cards available above 700 also have higher credit limits, which means your credit utilization percentage automatically improves even if your spending stays exactly the same. A $300 balance on a $500 card is 60% utilization. A $300 balance on a $2,000 card is 15% utilization. Same spending, completely different impact on your score. The better card does not just reward you with cash back. It helps your score continue to improve just by existing in your wallet. Tyler is 22 years old. He is in his final year in one of the university in Chicago. He has been on a secured card with a $250 limit for 14 months. His score hit 708 last month. He was pre-approved for an unsecured card with a $1,500 limit and 1.5% cashback on all purchases. He moved his monthly subscriptions and grocery spending to the new card. In his first 3 months, he earned $42 in cashback on money he was already spending. His utilization dropped from 60% to under 10% because of the higher limit. His score moved up another 18 points without him doing anything new. So here is what the 700 shift actually looks like across all 3 areas at once. For a real recent graduate navigating real-life decisions. Before 700, You are paying extra deposits to rent. You are paying higher interest rates when you borrow. You are earning nothing from your everyday spending. The system is extracting more from you at every single touch point. After 700, the deposits shrink. The interest rates drop. The cards start giving back instead of only taking. The system starts treating you as someone worth competing for instead of someone to be cautious about. None of this requires a high income. None of this requires a trust fund or a family connection or a lucky break. It requires one number, and the specific behaviors that move that number above a specific line. Here is the exact order I would follow if I were a student or recent graduate trying to cross 700 right now. First, check your full credit report, not just the score. Go to annualcreditreport.com in the USA, ClearScore in the UK, or Borrowell in Canada. Look for any errors: a wrong address, a duplicate account, an incorrectly reported late payment. One disputed error can move your score by 20 to 40 points if it gets corrected. Second, get your credit utilization below 10% before your statement closing date. Not the due date, the closing date. That is when the bureaus take their snapshot. If your limit is $500, get your balance below $50 before that date. This is the single fastest lever available to most students and recent graduates. Third, ask a trusted family member about the authorized user option if you have not already. Being added to an account with 5 or more years of clean history can add significant positive depth to a thin file very quickly. Fourth, do not apply for anything new while you are in the building phase. Every hard inquiry pulls your score down temporarily. Let the positive history compound quietly without interrupting it. Fifth, be patient for 60 to 90 days after making changes. The credit bureaus update on a monthly cycle. Changes you make today will show up in your score within 1 to 3 statement cycles, not overnight. Marcus now has a 706 score and his own apartment. Priya is saving $31 a month on her student loans. Tyler earned $42 in cashback in his first 3 months on a card he qualified for because he crossed 700. None of them did anything dramatic. None of them earned more money. None of them found a shortcut. They just understood what was waiting on the other side of that number, and they built toward it with enough patience to get there. The math does not lie. The 700 shift is real. And for students and recent graduates who are just starting out, crossing that line might be the single most valuable financial move available to you right now. Not because 700 is magic, but because of what the system does the moment you get there. Start today. Check the report. Lower the utilization. Be patient. The number will move, and when it does, everything changes. If this video finally made the credit score number feel real and worth building toward, hit subscribe, because we are going to keep breaking down exactly how the system works and what changes at every level until none of it can surprise you anymore. Drop a comment and tell me where your score is right now, and I will tell you exactly which of the 3 steps to focus on first. I read every single one.